price at those petrol pumps keeps on soaring by an unbelievable rate at the moment. And is there any respite, any light at the end of the tunnel? Can prices come back down? Well, it's all down to the underlying market. And I'm going to have a look at WTI Crude Oil, our regular look at the price action, a bit of sentiment, a bit of the fundamentals thrown in as well to see where it might be heading next. So with that, let's take a look. Rig count numbers, the barometer for, well, a good barometer for the energy crude oil industry, still showing very positive numbers. Change from prior count +7 and change from last year +270. That's on the US line, that's the one I focus in on. So like I said, still looking pretty bullish there. For those that use crude oil inventories, worse than expected last week, 1.956 million barrels against a forecast of minus 1.314 million. Forecast not out yet, look for that coming out on Tuesdays, and then the results coming out on the Wednesday. So heading back into a bit of chart sentiment, down the bottom, seasonality, a bit weak this time of year, then flattens out into the summer. Important takeaways from this chart though, above that, the commitment of traders data, red line large commercials, black line large speculators. Look how the large speculators correlate to the price there at the top. That's what we'd expect, and we'd want to see the inverse of the large commercials to the price. That's all playing out, so that's telling me it's looking a bit more bearish, and like I say, adding the seasonality, all looking a bit weak at the moment. The longer term look in the weekly line chart, well, it looks a bit toppy at the moment. You can see the two standard deviation regression trends there, that sort of reddy blue shaded areas. Price pulling back from that recent breakout highs back towards the mean, really. $105, $106, $107 around that sort of price range. To the bottom of that range, it's down to the 78.6% Fibonacci line at 95, and then it's a long way down to that pink trend line in the sort of mid $70 if things get pretty nasty. But the 61.8% Fibonacci line at $78.2 probably will slow things down before it actually reaches there. But at the moment, you can see the trend still strong, really, from the early part of 2020, and just a bit bumpy at the moment with a bit of a pullback to the mean. Now, if you are bearish, longer term reversal entry points based on the 4-line break chart, and it's a daily chart setting, so it's a bit more cautious, a bit more conservative. $95.50, 94 and 30 cents to the downside. You can speed that up if you want to by changing the time frames of the line break chart, maybe down to 3 hours, 1 hour. Have a play around, see what signals it gives you, and fit that into your trading plan. Daily Heikin Ashi chart, well, at the moment the signals at the bottom looking weak, bearish. Volatility is down to late 20%, much lower than what it was in time, March time, when we saw the Ukrainian conflict kick off. Volume around where it normally is, and heading on to the price, the long-term probability power box, 63.4% possible down move, odds of the down move, I should say, and you can see it playing out, marries into the institutional power zones, those red dashed lines. That's good support resistance zones, and we would also look for the shaded trend areas. That's that light green at the moment, so that negates a potential down move using the probability power box. We'll wait till that flips, depends on your risk appetite though, but at the moment it's looking a bit more neutral there. And our 2-line pink box breakout setup also trading neutral at the moment. So on the daily Heikin Ashi, I'd say it's been weak bearish in the last week, but looking a bit more neutral. And the Renko chart over the last few months, $1 block size used for the chart. Signals at the moment, it's a mixed bag. The longer term DMI trend at the bottom, bearish. Stochastics just starting to turn round in the middle there, and the regression I would call weak bearish and heading back onto the price. You can see it's been pretty flat really last few months within that range of between say $100 and $120, pulling back from those highs like we saw. We've got the sell signal on the 2-line pink box breakout setup at the moment currently, and the price just forcing its way on that Fibonacci 38.2% line, $107. And if it breaks there, which we also saw in the line chart, the weekly line chart earlier, downsides potential $102, then into those 90s and late 80s. And if we see another bounce from here, then up to that 61.8% Fibonacci line, $115, then into the higher areas in the early 120s, and then if it breaks there, you know, the fundamentals really kick in, then a decent upside push, $136, $141 sort of range. But at the moment it's holding I would call neutral, flattish, with a hint of weak bearishness in it, and it's probably looking a bit more consolidatory at the moment. So if you're wondering where you can trade, the outright price of WTI, CFD spread bets in Trade Nation here, just for an example, you can see US light crude futures, the August contract, nice decent spread to it, not too expensive there, and leverage 10 to 1, which isn't too bad. But what makes it more attractive is that small trade size, 0.1, so that means it's more affordable for retail traders. So just an example of where you can get exposure to WTI crude oil, and you can actually see above that Brent crude with 2 futures contract months as well if you fancy a play. So in terms of a score then for WTI crude oil, I'm going to go neutral overall at the moment. I'm afraid it doesn't look like there's any respite at the moment with a big pullback in the price of crude oil. There's some key technicals to break through before it starts to move down into the 90s and $80 sort of area. Now Heikin-Ashi, Renko, you can see pretty neutral. Probability power score showing a better chance of a down move, 63.5%. You can see the red-green-red combo there. You want that middle one to turn red. Time it in for the optimal trade there. In terms of other indicators, seasonality looking a bit weak bearish. Commitment of traders, bearish. Rig count still holding bullish. Line break giving you some potential downside entries in there. And in terms of targets, risk return wise, to the upside pretty decent, 3 to 1, 6 1/4 to 1, and to the downside still not too bad, 1.83 and 2.83 to 1. But overall, I say I'm going to give WTI a neutral score this time round. As you can imagine, I keep a very close eye on the price of oil because I trade it awful amounts. That means when I go to fill up my car, I also like to see the price moving in correlation with the underlying, and at the pumps at the moment it's certainly not doing that. You take from that what we all are thinking at the moment, but at the moment in terms of the actual price, it's looking a bit more neutral. Is it consolidating for a further push upwards, or will it be breaking on downwards fast? Difficult to tell at the moment. Fundamentals, something will probably kick in to drive it in one way or the other. Use those technicals, the analysis there to time your way in for the optimal trade. Let me know in the comments below where you think WTI is heading next. Do you agree, disagree the analysis? Love to hear from you and love to hear your thoughts. If you want to talk even further about WTI or any market for that matter, why not join us in our free traders club on Discord? I'll put the link in the description below there. Anybody welcome, like I say, totally free, building up a trading community of like minds to discuss such issues as this. Well, if you've liked today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons, and all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.